Good afternoon, guys. Biotech killed it today. Looks like biotech up 5.42%. Let's see here. IWM was up 2.6%. The Qs were up 1.7%. And looks like the S&P 500 up 1.3%. We're going to get into all of this today. Okay, let's look at this. What do we got on the calendar here? We're looking at a couple numbers we wanted to see for possibly tomorrow. I did want to take a look at what of course, real medium household income, but going down here, it would be nice to see. We do have retail sales coming in tomorrow, excluding autos. However, we do have Fed chair on Wednesday, 2 p.m. and then 2:30 p.m. press conference. So be mindful of that. Be mindful of taking large positions before that. In fact, we could trade sideways all the way up into the announcement. It is possible that the market tries to get the Fed to act by selling off before the announcement, or anticipation of good news coming out. Maybe we will rally up into the announcement. So we'll take a look at that while we're on the web here. Put to call ratio for Friday, we got the numbers in 0.67. 0.67, so that's 67 puts for every 100 calls. We will see how as time goes on here. Possibly today, I would expect a little bit lower of figures, maybe all the way down to 0.5. We will see. I don't want to give an estimate yet. The numbers will come out a little bit later. Let's go back over to the charts here and see what we got going on today. S&P 500, we were talking the last couple of videos and then also on live stream. And by the way, guys, if you want to, feel free to join us. Live stream we do on Sundays, 5 p.m. Pacific Standard Time. We go over charts. If you gain value out of these videos, go ahead and hit the like button and then hit the subscribe bell notification if you're new. That way you can get these videos. And that way when we do go live, you won't miss a thing. So looking at the S&P 500, this is the bird eye view right here. We are still in this uptrend. And you can kind of see it on my chart here. We're in an uptrend, and I've got a tag in several areas. I've got it down here, 1, 2, and then we have a third tag on Friday. Something to be mindful of. We are technically in an uptrend. I'm going to zoom in a little bit here just so you guys can see. Let me do this for you. There. I want you guys to really see the numbers on your screens there. Yes, we are in this uptrend. Something that I just kind of noticed today is this overall pattern. Now I'm going to zoom into lower time frames, even lower than this. Of course, this is the daily chart of the S&P 500, but this pattern technically, as far as I'm concerned, is bearish, looking at the daily chart, but in the context of we are in an uptrend, and until we break below that support here, it can turn into something bullish, and I'm going to show you what I mean when I zoom in here. But overall, my plan still stands firm. I'm going to continue to sell into strength. It would be nice to see a little bit of rally here, something to give us some higher figures, possibly all the way up here. I'll give you a price on both of these, but possibly up to here. Once we get through 342.50, we do have resistance around 347.30, and then again all the way up here around 355.90. We could call it 356, somewhere in that area. And that would be an optimal area. If price can get through 342.50. Those would both be targets on my list and possible areas to short once we get up there. But we will talk about that one day at a time here. I don't want to get ahead of the train here. Let me zoom in just again so you guys can see this. I want you to take a look at this. And what we're looking at the last couple days, this isn't exactly the most bullish finish of the day, but we have to be mindful. We were looking at this falling wedge, and I think we had it drawn in like, well, I don't know. It was something. Let me back up here. How did we have this drawn in here? This is the hourly chart. We could go across like this. We could even just do this and make it more of a triangle pattern. But really just kind of looking at this and what do we have on the docket? It wasn't exactly the most bullish finish, but we have to be mindful. It was a gap higher. We put some serious numbers on the board. I'm not totally convinced that I know tomorrow is turnaround Tuesday, and that's something we have to be mindful of. However, we're bumping up against this, against this resisting, this falling wedge pattern. It is possible the more that we bump up against it and we can't get through it, it is possible that the market will just gap right over it. That's something to be mindful of. And another thing is, if it does gap above it, I don't know if that's necessarily something that we should chase, depending on what your trading plan is. I personally am not looking to chase that. But let's say we gapped higher, we pulled back to this, to the prior supply turning into demand. And then once we broke above those highs, that would be a good area to attack. Let me clear this off the screen. And then, of course, since it is turnaround Tuesday, we could possibly just look at this overall thing and say, this was resistance. We're going to start falling here. If we do, I'm going to give you 2 price levels on the screen, which I think, actually I'll give you 3, which should be support in theory. The first one is going to be 336.90. If you are day trading, or let's say price gets down to that level tomorrow, 336.90. And then we should have support down here, actually at today's open, which is 334.50. That's a really good price area to lean into as far as taking a day trade. And then, of course, down here, the low of this is 331.13. However, being mindful of taking the lowest one, and the reason why is if we are down that low, I'm not so certain that if price got below this trend line, I'm not so certain it would hold. And if we did break down, let's say in the next couple days, I'm not so certain again that we should chase this. Maybe wait for a pullback, back test, and then once we break down below that and we start making lower lows or lower highs, that would be a good area to attack to the downside. Let's see what this develops into tomorrow. I don't want to get ahead of ourselves here. We have a little bit of time on the docket. I'm not too convinced that the market's just going to sell off before the Fed, but you never know. It is possible. And this is, of course, here's the QQQ. I want you guys to see the same kind of levels on the screen. We have this trend line down here, and then we have somewhat of a pattern developing here. I don't know if maybe we could call this a channel. If we look at the ES futures chart, it almost looks like more of a wedge pattern than it does a channel pattern. And same thing with the Qs, like we're kind of bouncing in here, consolidating. And of course, today we gapped higher. We ran all the way up to this resistance level. We pulled back, and now we're challenging it again. In my opinion, we've seen this over and over and over again. Usually what happens in these scenarios is price likes to gap above it. And I'm looking at the bid and the ask up here on the top of the screen. And it says the bid is 275.55 and the ask is 275.56. So we are getting up there a little bit. I'll do this with my cursor so you can just follow my cursor. 275. We're a little bit above where we closed the day at. So we are still bumping a bit up against that resistant level. But again, that's something to be mindful of. We can continue to bounce around in here before we actually make a determination on which way we're going to come out of the pattern. And there's nothing that says we have to come out of this pattern in the next couple days. It could take a little bit of time. Let's shoot over to IWM. This is why I was looking at relative strength. Of course, IWM has been, compared to the Qs and to the S&P 500, the IWM has actually been a little bit more weak. And so we are looking at the hourly chart right here. Let me zoom in. All of you guys on your looking at your cell phones here. So same kind of thing going on, except for the IWM looked like it did break the trend. And I'm going to go actually to the daily chart. You can see it a little bit better. So you could draw in a couple trend lines in here, and this is why you got to be careful with trend lines, because just because we break down out of a falling or out of a rising wedge pattern, or depending on where we drew this trend line. In fact, I could draw this. Let's do this actually. Maybe you can see it a little bit better if I go like this. Let me zoom in on this. And then if I drew one coming off the March lows, if I did something like this kind of was the pattern. And here's what I mean. Even though price broke like right here, it broke below and then it just rallied right back above. So we have to be mindful of these sloping trend lines, or what we think should be price should be respecting that trend line. And as you can see, price is now being pulled back up to it. So it is possible that we go up here to back test or even get through it. Those are both things that are possible. Let me go to an intraday time frame so you can see what's going on. IWM put on some pretty heavy numbers on the board this morning, overnight. So if I just zoom in here, and this is why I think the S&P 500 has a little bit more to run. I mean, we saw a gap higher, it consolidated, and then opening prices ran up, consolidated some more, and then it started running up some more. So it is obviously making higher highs, higher lows. To me, this is a very bullish finish. Even though we pulled back at the end of the day, it's a bullish finish. I would not be surprised if we gapped higher again in the morning and broke trend. But then again, tomorrow is turnaround Tuesday, and of course, Fed on Wednesday, and then a jobless claims at the end of the week. Let's look at IBB. We normally don't look at this one, but this is where all the action was today. Let's go to the daily chart. This is where all the action was today. I mean, this is an incredible chart. It was rolling over. We talked about this on Friday, how it did in fact roll over. It found support at this 200, and normally I would call this a bear flag pattern, and usually we would break to the downside. And what you see right here is, let me zoom in a little bit more so you can see this a little bit more clear on your screen. Let's do this. So what you saw is, you saw a huge candle going down. It created a bull, or a bear flag. But because it didn't play out to the downside, what we saw is that this same thing was released, but to the upside and right at resistance. Anything is possible. I would not be surprised if the IBB biotech came back down here to back test. But then again, it was such a bullish finish that I also wouldn't be surprised if we gapped right above this resistant area and maybe had a continuation move tomorrow. We do see this a lot in the biotech, where really good news will come out, and then the next day you'll hear a little bit of bad news that comes out, or news that contradicts the news that we heard the first day. We have to keep that in mind with biotech. What else do we want to look at? Let's look at the VIX. I know we don't really look at the VIX much, but we do see this. Let me zoom in here, and I want to be a little bit, we did have a trend break here, and then if you wanted to draw it from back here, you could. There was a trend break right here, and you see this action where price ran up, and now it's follow my cursor if you can. Price broke out, and then it has just been pulling back. It is possible that this gets faded right back down to this support level, $22. And keep this in mind. This is in my own opinion. This is what I believe. I believe support around $20, $20 to $22 is. If you guys remember the VIX when it was down at $10 to $12, I believe that this is the new range. Until we break down into that gap below this price area, this is the new demand. And I know it's hard to put that in perspective, as far as it is a volatility index. So how can we do technical analysis on it? I would argue that we can do technical analysis on any chart, but for the purposes of the VIX, it's something that we can accumulate. So in my opinion, it is worth accumulating when we get down into this 20 range. And we don't know when or if it will break back out again. Of course, we could always do this and draw in another, maybe it's going to consolidate some more in here. Also, keep this in mind. It is weird to see the overall market rally or sell off, and the VIX, fades off with the market, or the VIX sometimes you'll see it spike up a little bit with the market. It's kind of been acting weird on its own this last 2 weeks here. It's been kind of doing its own thing. It is a volatility index, and we have to understand that it's the way that it actually measures the the put to call ratio, or the way that it's actually calculated and figured. In fact, we could look at the VXX, and it's almost the same thing, where maybe the calculations are a little bit different this time around, or maybe the fear isn't as increased as it was before, like especially compared to the virus. But I don't expect the VIX to just fall right through support. I don't think that it will. I think it'll take a little bit of time. I don't think fear has completely left the marketplace. One more chart, and then we're gonna wrap it up. Keep this short. Let's look at TLT. We talked about a trade that we took in on Friday. Let me do this here. So with TLT, same thing. What we see here is we see that it came back down to support. It rallied, it pulled back, and it made a higher low. And now we're challenging resistance right up here right now. So the same thing. We'll keep an eye on this and just really look at this chart. It would be interesting. Normally what we want to see the yields rally with the market. And so if TLT is rallying, what that implies is that people are buying bonds. And so when people are buying bonds, the yield should be falling. In this scenario, and in this case, what we see is the TLT, which is the bond market. This is actually the inverse to the 20-year. But what we see is the bond market and the dollar. If I went over and looked at the dollar right now, it doesn't always have to rally or sell off with a market. Sometimes there is a little bit of divergence in there, and that's something to kind of keep an eye on. It is a good indicator and a good future looking indicator on what we think that the overall market is going to do. That's something to also watch. So have a good rest of the week, guys. Again, feel free to like this video if you've gained value out of it. Hit the subscribe button, bell notification. We go live Sunday, 5 p.m. I'll see you guys in the next video.